Hello, everyone, and welcome to our Women Get On Board virtual speaker series, our first of 2022. We just have a few tech tips for you while everyone comes in the room and gets settled. We ask that you please make sure to turn off your camera and turn on your mute through the duration of the talk. And this session will be recorded, and that recording will be shared in a follow-up communication along with a feedback survey after the event. You may use the chat function at any time to ask a question for the panelists to be answered during the Q&A portion of the event. Now, without further ado, I'd like to introduce you to Deborah Rosati, the founder and CEO of Women Get On Board.
Thank you, Keisha. Delighted to be here today. Wow, what a great start for our first speaker series for 2022. So welcome all. Got a really great topic. What should you be thinking about and what are independent review committees? And we have a phenomenal panel to have a fireside chat around. So what I really want to do is thank everyone, because predominantly we have a significant registration list from today, of which most of our members, and Women Get On Board is a member-based company. Our mandate is to connect, promote, and empower women to corporate boards. And just as of last night, we had a huge milestone. We hit 800 members, our first time in history. We have 800 members across Canada. We have a few into the US. Our membership is diverse. And we have phenomenal accomplished women corporate directors and aspiring women corporate directors. And our goal at Women Get On Board is to get one more woman on a board, quite simply one board at a time. So let's go to the agenda. So I'm going to turn it over to Eleanor Mcintyre in a moment, but I wanted to say we're really delighted to have Blackrock as our sponsor for our first speaker series for 2022. So thank you to Blackrock. I would like to introduce Eleanor Mcintyre. She's the Managing Director and Chief Operating Officer of Blackrock. Hello, Eleanor. Eleanor is responsible for the strategic direction for the Canadian region, driving key initiatives, projects, and managing operational issues. Eleanor has been with Blackrock since 2006 and has held previous positions in the HR team. Eleanor has over 30 years of experience in the financial services industry, and she's worked both in Canada and the US. Over to you, Eleanor. Thank you.
Thank you, Deborah. We're delighted to be here, and Blackrock is happy to be the sponsor for this important topic. Just a little bit about Blackrock. We have been in Canada. This is our 30th anniversary in Canada, and although we're not a household name within the asset management business, we are quite well known around the world. In Canada, we manage 157 ETFs that are locally domiciled products. And our AUM for Canadian clients across institutional and the iShares, our ETF business, is $260 billion. We have 130 employees on the ground in Canada, primarily in Toronto, but with an office in Montreal as well. So as I said, we're more than happy to sponsor this event and looking forward to a very robust discussion. As well as part of my duties as COO, I'm also the management representative to the IRC, Blackrock's IRC, and work very closely with the chair of our IRC, Martha Fell, who I will introduce in a moment. So we are very involved with this, and it's great to have Women Get On Board highlight IRCs, which are a little bit unknown in Canada. One of the things that, when I was thinking about preparing for this session today, I just thought I would start by saying, here's a couple of questions I would hope that you're thinking about while we are listening to our esteemed panelists. The first is, what is an IRC, which of course is the title of this session? And then how does it differ from a board? What experience and qualifications do we look for when we're looking to bring someone onto an IRC? Of course, through that, you'll be thinking about, is this suitable for me? And then also very important, how do you access opportunities on IRCs? So let me introduce the panel. We have a very esteemed panel, as Deborah said, starting first with Merrill Kriss. Merrill is a financial services executive with more than 20 years experience in both domestic and international banking with a major Canadian bank. And after a career that was focused on corporate and investment banking, she moved into personal finance, where she initiated a comprehensive client services offering. She subsequently formed Kriss & Associates Limited, a consulting practice in finance and wealth management. Her IRC experience includes serving on the CIBC IRC from 2014 to 2020, and she currently is the chair of the SEI Canada IRC. Secondly, we have Marcia Lewis-Brown, who is a 30-year veteran of the investment management industry, working with institutional and private investors, as well as mutual funds. She held managerial positions with TD Asset Management and Amundi Asset Management before working as a private consultant and corporate board director. Marcia currently chairs the IRC for CIBC. And thirdly, Martha Fell. Martha is currently the chair of our IRC here at Blackrock, and she has served on that committee since 2014. Prior to that, Martha was the first full-time CEO of Women in Capital Markets and was awarded the top 100 most powerful women in Canada by the Women's Executive Network in 2012. Prior to her role at Women in Capital Markets, Martha enjoyed a 15-year career with CIBC World Markets on the bond trading floor in trading, sales, strategy, and debt origination. I think it's evident that we have three very powerful, very well-experienced IRC chairs, and certainly I couldn't think of a better group to address this audience. Over to you, Martha.
Sorry. Thank you, Eleanor, very much for that kind introduction to our session today. I would like to also extend my thanks to Deborah and to the Women Get On Board team for putting this event together. We're thrilled to be your kickoff for the 2022 speaker series. Being involved in women's organizations has always been a passion for me, so I was especially delighted when the opportunity came for us to be able to put a spotlight on IRC's independent review committees. As many of our audience probably knows, it's not something that's common term, even if you're in the financial services industry. So the chance to be able to speak directly to board-ready women who might have an experience or a background that's suitable to an IRC is a unique opportunity, and we're just thrilled to be here. So the structure of our conversation today is threefold, just as Eleanor suggested. We want a little chance to talk about what are IRCs, what's the history of them, some of the nuances around that important word independence, and obviously what we're expected to do for the fund holders. But also, and more importantly for many of you, I think it's learning how you might be a suitable candidate and what experiences and backgrounds are typically recruited, as well as how to access those opportunities. So my first ask really is to give each of our panelists an opportunity to tell us a little bit about their background and their story and how they became interested and how they joined the IRCs that they sit on or have sat on in the past. So I'll turn it over first to Merle to give us her background.
Thank you. It's a pleasure to be here. In 2007, this is ancient history, I was serving on a not-for-profit board with, actually it was John Crow, who had retired from the Bank of Canada. John chaired this board, and he came up to me after a meeting and he said, we're going to be starting something new, and it relates to conflict of interest, and it will be with the CIBC. Do you think that might be of interest to you? I had no idea. I didn't know anything about IRCs. I knew nothing about 81107, but he said, I think you'd be good at it. So I think that's a plug for your not-for-profit board activity. In any case, it took quite a while for the powers that be at CIBC to get around to me. I'm not sure how they felt about having a woman. I was the only one at that point, but I did join. I was quite excited about it, and that's where the first one came from. Now that went on for 12 years. I was on the CIBC IRC for 12 years, and about the 10th year, I was approached by SEI based on a relationship with a compliance person at CIBC to see if I would join the SEI board. They are a primarily US company with operations in Canada, and they were looking to Canadianize their IRC. CIBC was very good about allowing me a second IRC because there are many organizations that don't want you to be on more than one IRC, but they did say go ahead. And after a couple of years, I was asked to be chair of the SEI IRC, and that's something I'm doing as we speak.
Great, thank you. I'm going to turn it over to Marcia.
Hi, thanks again, everybody, for inviting me. I, like Merle, it's networking that got me onto the IRC for CIBC, and eventually I became chair. Merle was a colleague of mine back at TD, and when there was an opening on the IRC after about, I don't know, 8 years or so, she put my name forward. After that, you have to basically go through the interview process, and you may or may not get the job, but it's certainly whom you know helps open doors. And I've been on that committee, I don't know now, for about 6 years, and I am now the chair. And my background, by the way, is I was in investment management for many years. And prior to that, I was a professional musician. And so what your original background isn't necessarily.
Marcia, I think we lost the last part of your audio. You're on mute.
I don't know what happened. Anyway, it just shows any old background can lead you to an IRC.
So it's interesting. I think the three of us have had somewhat different approaches into coming into an IRC, but in many ways there's some parallels. I think my story is a little bit different. One, because I was not really in the industry when I was recruited. My background had started off in a career on a bond trading floor. So my knowledge of securities and the securities business was fairly strong, but it wasn't even on the fund management side. It was on the trading floor side. And my time after CIBC took me into the world of women's advancement, where I was CEO of Women in Capital Markets, and my knowledge or my network was strong, but it was in an entirely different direction. Ironically enough, the parallel, I think, for some of us, and I can say this amongst this audience, was in some cases, they may have been targeting specifically women, because in the last 20 years, we all know that there's been a quiet and in many cases louder exposure to the advancement of women, and particularly women on board. And I know in my case, it was not necessarily unique. We will talk a little bit about how IRCs are structured and how individuals are recruited to them. But I will reference the fact that when the IRC for Blackrock approached me, it was specifically because they were trying very hard to take their group of 3 and expand it to a group of 4. And they were 3 gentlemen and very specifically wanted to fill the 4th seat with a woman, full and plain and true disclosure. They really were not interested in too many candidates that were within their similar structure, existing structure. So I think that's one key element. And I know it's one of the reasons why I was even on the slate in the first place. But like Merle, when I was introduced to the idea of IRC, I was on the phone in front of my computer and had the benefit of being able to Google it to make sure I knew what it was the person on the other end of the phone was talking about. Because while terminology in our industry is commonplace and acronyms are used widely and we are all expected to know what all of them are, that's not always the case. I'm even certain that the majority of our audience today may have come from financial services or had an experience at one stage in their career, and many of them may not have ever heard of an IRC until they saw the posting for the Women Get On Board event. So the newness of IRCs in 2007 and even leading up to when I joined in 2014 is still there for a lot of members of the community. But I think that, you know, as the turnover, which we'll also talk a little bit about in our session today, the turnover of IRCs expands. I think there's more and more members of the financial services community that will start to have an appreciation for where these board-like roles can offer them an opportunity. So I want to dive into our questions. The outline for our event today, as I mentioned, is talking a little bit about what is an IRC, the history of IRCs, and then this element of independence, the importance of the word independence in our structure and in the intent of how IRCs were originally developed. Lastly, as I said, many of our audience will be keen to hear is what makes a suitable candidate and how do they get recruited? So if we start with the history of IRCs, I had some of it in the outline for the event that our attendees had a chance to read and review. But I think just to give it a little bit more context, as Merle alluded to, it was back in 2007. In fact, they came into existence in 2006, but fund managers had until 2007 in order to transition and have them in place. They were created to impose a consistent standard of independent oversight. Sort of sounds like a board, but they were intended for publicly offered investment funds in the jurisdictions that are governed by the Canadian Securities Administrators. IRCs, we know, are provided with information solely from management, similar to a board, and they are expected to communicate directly with the regulators, which I think is an interesting element. IRCs are obviously, in the simplest terms, intended to enhance investor protection by ensuring that the investment funds are protected, and ultimately the investors are at the forefront of when a fund manager is facing what we deem a conflict of interest. The world of IRCs revolves around that one term, conflict of interest. It's often referred to as a COIM. So for the audience sake, if you hear us slip into acronym territory, you might hear the word COIM, which really just means a conflict, which is what we're being asked to evaluate as the role of the IRC is intended to do. So what is a COIM, a conflict? It is defined as, and bear with me, I'm actually going to read this, a situation where a reasonable person would consider a manager, fund manager, or an entity related to the fund manager to have an interest that may conflict with the manager's ability to act in good faith and in the best interests of the investment fund, or a conflict or interest of self-dealing provision that restricts or prohibits the investment company or fund or the manager or the entity. So if a COIM arises, a conflict arises, the fund manager is required to present that information to the IRC, and the IRC committee, the independent review committee, is then asked to evaluate that matter before the fund manager can take any action. So with that history bearing in mind, I'm going to ask Marcia the first question. What do you think best characterizes an IRC in terms of size, term, structure, etc., that will help our participants appreciate the difference between an IRC and a board?
Okay, so there are subtle differences. Probably the main difference is that the IRC has a very quite a narrow and specific role. The board is really overseeing the whole fund company. So they have oversight over business decisions. The investment managers have to report to them or keep them apprised. Any risk management, all of those issues are all reporting up through their board. But the independent review committee is there specifically to look at issues of conflict of interest. And so that's probably the main difference, is it's a very special purpose, very specific role. And IRCs often struggle with that because, of course, we're interested in the investments and we're interested in all of these other things. But so you have to constantly be aware of mandate creep and make sure that as a committee member that you stick to your knitting, even if in our case at the CIBC, we do get presentations so we can put our role in context, but we have to make sure we know what our true role is. Generally, an IRC is smaller than a board. Some smaller companies might have 3 or 4 members. Ours is 5. I've seen a few with 6 or 7. That gets to be unwieldy, in my opinion. Boards usually have subcommittees. IRCs generally don't, because our role is so specific. We are the committee, basically. All the members have to be independent, just like a board. We're reliant on management input, just like a board. Although a board probably might be more likely to delve into things that, whereas we're really reliant on what management tells us. So the idea isn't to eliminate conflicts, because they're going to exist, but to be transparent about them and to manage them. And this is, as a bank IRC, there are particularly added issues because banks own dealers, bank are the distributor, and banks are the manager. So there are all sorts of conflicts and you can't avoid them, but you have to examine them and make sure that the manager is acting in the best interests of the unit holders.
Thanks, Marcia. So I think you've covered a lot of ground there. And I think what I want to turn to Merle and ask now is, given your tenure, you've been involved right from the beginning since 2007. Can you highlight for our audience, what do you feel are the biggest changes, or I guess the components of the IRC that you've observed have changed since 2007?
Well, it's very interesting. I think that the managers in 2007 were initially very apprehensive that the IRCs would not understand the difference between an IRC and a board. They were also concerned that they wouldn't be able to find enough qualified people, strangely enough, who would be able to take on these roles. What has happened in the subsequent years is they've moved from apprehension to acceptance to enthusiasm. The reason being that one of the managers said to me, for the cost savings from being able to do inter-fund transfers, we have saved so much more money and so much more time, because prior to this, they would have to go to the Securities Commission to get consent to do this kind of thing on a case-by-case basis. So that I think counts for some of the enthusiasm. With the passage of time, some of the IRCs have changed their size. Some have gotten bigger. I don't think too many have gotten smaller. The challenges, I think, of the diversity of products are put a little bit more pressure on members of the IRC to understand what's happening in the industry. And of course, if you have a good manager, that manager will, through ongoing education sessions, keep you very up to date on what's happening in the industry. Now, with the passage of time too, we've had turnover. As Marcia told you, she came on board, I guess, about 8 years ago. And while the initial IRCs were the responsibility of management, management had to choose the IRC. the members of the IRC. Subsequently, it is up to the IRC to, as part of their independence, to choose managers and also, interestingly, to set our compensation. And that is something we look at every year. And I think most managers have seen, most IRCs, pardon me, have seen their comp rise over time. So I think that and the need for more diversity, as Martha has indicated, has made this an interesting time for women to consider the IRC. I think let's leave it at that for the moment, because I think we'll come back to some other issues as we get further in.
Thanks, Merle. So Marsha, I'm going to give you just a couple of minutes. I think we've covered a lot of ground now between where IRCs fit in terms of management. I think there's a unique element that I'm hoping you can do quickly in how does an IRC fit with a regulator, like a bit on where our responsibilities lie.
Yeah, in a nutshell, management likes the IRC because it helps them get their act together and catch things that they might not otherwise have caught before the regulators do. So we're really a help to managers to help keep them on side, and just the act of having to report to us make sure they look at all these issues. So we're really on the manager's side, if you will. Regulators like us because, for one thing, we save them a lot of work because, again, we're a really great filter for catching things, so that the things that actually go across the regulator's desk are things that are true breaches, true things that they want to see. And then they can just read the report from the IRC that sort of summarizes everything. And I think it's really a win-win from both sides. So everybody it's like an extra pair of eyes, and it's helpful from both sides.
That's a great way of paraphrasing it. So I think the next thing we're going to talk about is this element of independence. Obviously, it's in the title of our group's Independent Review Committee. And I just want to touch on something that Merle mentioned earlier on. Technically, she's right. An IRC we have no power, we have no authority, we have no responsibility for the operation of the investment fund or the manager. It is strictly in order for us to ensure that the fund holders, the unit holders, are protected as best as we are able to, based on the information that is brought to us by the manager when there's a conflict. In order for us as IRCs to prove our independence, we have to ensure that every member of the IRC is also an independent individual, and that they are able to act with good prudence on behalf of unit holders, they themselves. As we know, we have to sign off on this every year to prove our independence and to acknowledge it, and that is part of our regulatory responsibility. But there's an element of independence that I think always creeps up. It often is only in the case of recruiting, which is our next topic. So let's just touch quickly, and I think it's best illustrated in stories. And when we were in our meeting talk, we each had an element of, oh yeah, an individual applied for an IRC, but there was a red flag raised during the recruiting process because they actually weren't independent based on the criteria for that element. Can each of you tell us quickly one of your little stories that illustrates that point best? Merle, do you want to go first?
I'll start. Yes.
Merle, go first.
Yes. We were looking we were looking through the skill set we required for replacement of an IRC member, and we found an absolutely superb candidate. And that superb candidate, when we looked at the independence issue, it turned out that her family company had a significant loan with the CIBC. It had slipped her mind, and that shouldn't have, because she was a corporate lawyer. Nevertheless, it disqualified her. And it was quite a disappointment for us. So I just want to add to what Martha said. The opportunities for disqualification when it comes to independence. Does your husband work at the bank? Do you have children who work at a supplier to the bank? Do you own shares in a company that sells to the bank? I mean, there are so many. I've said to the bank, I mean to the manager. It's really extremely intense to get into that, and we do that as part of the recruiting process. But over to you, Marcia.
Yeah, actually, I can think of a couple examples. One, an obvious one, is we had a member on our committee who was, I guess, retired, and she was a lawyer and had worked with a regulator, and she was very strong. But then she decided to go back to work for a competitor. So clearly, goodbye. And another example would be we did have somebody who had a daughter who was living at home and was about to get a job with the fund's auditor. So clearly that's a conflict of interest. And we had somebody whose husband, another example, had retired from CIBC about a year previously. And we have a rule, and I don't know if this is a regulation, but it's certainly our rule, that you have to have retired for at least 3 years, so that there isn't that's sort of deemed to be, now you're independent after about 3 years, because after that, you don't know what's going on, presumably at your old employer. So, and you know, they might be little things and you might feel independent, but it's good. Actually, we distribute the questionnaire to candidates in advance so they can look through and they realize, oh my goodness, I am having to answer yes to this question.
Thanks, Marcia and Merle. I think those actually best illustrate some of the obvious ones. And obviously, we can't possibly list all of the potential conflicts that come up in circumstances like these. But I will let all our audience know that post the event, we are going to distribute a couple of documents that, based on the discussion today, we feel might be helpful, including, you know, examples of what's deemed as independent in these circumstances. And I'm just going to note, there's been a couple of questions on the chat that have come in. So without, I'm going to do my best to read them and get into them, but I want to quickly get to the meat of where we're going with this conversation right now. So to everyone who's putting in questions, keep funneling them in. We have got time to answer all of those questions. And I'll turn it now to the whole focus on recruiting. So we know that IRCs typically are 3 to 4 members and in some cases 6 to 7. We know the structure is a typical term of 3 years times 2 terms. So it's typically 6 years. And as Merle has suggested, that's sometimes extended. We know there are, in very rare cases, but still a few IRCs that have members who've been there since 2007. I like to think that as the focus on IRCs and governance and the regulators continuing to look at this, that they will be put under pressure, I think, to ensure that the regularity of turnover is back onto the 6-year timeline or thereabouts. And I would expect that some IRCs will start to look for opportunities to freshen their IRCs and stick to that should it become a regulatory requirement. So let's talk a little bit about the recruitment process. We alluded to how each of us got onto our IRCs. It sounded to many of our audience, I'm sure, along the lines of you networked and got an introduction. That is the case. And in fact, at a very rare time in Blackrock IRC history, we used Marcia, we have lost your video, just FYI.
Oh, I'm back.
Okay. We
Sorry.
We did use a recruiting firm in one particular year. And it opened our eyes, let's just say that, to a lot of nuances. Unlike Women Get On Board, which I know has a strong recruiting element to it, thanks to Deborah's amazing leadership and her team. Not very many recruiting agencies have really looked to understand what an IRC is. And without that understanding, they're not very helpful in helping IRCs recruit. Now, another important element that I'm going to reiterate, I came up earlier, is the IRC themselves are responsible for recruiting, just like a board, I guess. nothing to do with the management. So the IRC, if you think about it, is a group of 3 or 4 people meeting 4 times a year, typically, is responsible for going out and doing all the recruiting efforts to replace any of their retiring members. So that is a lot of work for an IRC. And I think, having the benefit of spreading the word around what IRCs are and encouraging, in particularly this instance, women who are board ready to consider the role is really important. So in terms of the recruitment process and some of the experiences that Marcia and Merle, you've had over your tenure at SEI and at CIBC, do you want to walk through sort of what your top stories are and advice in particular for our audience on what is the best way to go about it? Let's touch on what are those qualities and competencies that IRCs typically are looking for, and where do our audience go looking for opportunities? So I'm gonna start with Merle again.
Okay. First of all, piece of advice. Everything related to IRCs is in the public domain, everything that's really important. If you were to go and Google CIBC IRC 2020, you would find a report to unit holders. Part of the report will indicate who is on, by name, who is on that IRC, how long they've been on the IRC. It will also indicate what the compensation is. If you really want to have a look and see what the competencies of those folks are, maybe there's one that's missing, so you might say, I could provide that. But if you see an IRC that has one who's been on since 2010, one that's been on since 2019, and another one that came on in 2021, there's probably one there that needs replacing. So that's sort of the first tip I would give you, is look at the available information and make an approach to the if you know somebody on that IRC or wherever, or that organization, just try to make a contact and say, I'm interested in doing this. I think I could fit in well in this regard. How do I go about it? And you'll be surprised, I think, that how much you can learn without leaving your desk as to how to get on an IRC. So I'll turn to Marcia.
Yeah, I mean, in terms of a quite simple issue is, of course, your skill set. In general, it's a wide range of skill sets. Often they overlap, but obviously some kind of financial industry experience is helpful. If you have law, if you have trading or buy or sell, investment management, risk management, if you have a knowledge of more and more mutual funds are getting into the alternative investment space. So if you have some kind of special expertise, that might be helpful, since the old guys probably that are on the committee might be less in tune with that, because
sure.
usually you're retired by the time, or semi-retired by the time you get on one of these things, often because there are conflicts. So those are kinds of things to be. Part of it is just the luck of timing. A lot of it is if they are looking for somebody with your combination of skills, then you're in luck. But as Merle said, you can maybe sniff out what the timing is. And the other thing is, be yourself, because there's got to be a fit between you and the committee. And I mean, you have to be careful of the word fit, because we don't, old white guys all fit together sort of thing, and you don't want that. But there needs to be a combination of, we can all work together, and yet this person you're an independent thinker. You can ask maybe the tough questions. You'll be informed, you'll be prepared. And whom does help in that they might know that this former colleague, in Merle's case, knows that the new person is a good person to work with, and has. So sometimes it is helpful to know people. It's not necessary. On our committee, we've had both, but it certainly doesn't hurt.
Thank you both.
We call it plays well with others.
Yeah,
that's a great way of putting it. I'm going to highlight one point that I may be just repeating, but for the sake of our audience, like many boards, it doesn't require that you have a C-suite role in your roster of your resume. I did not. My C-suite role was women in capital markets. That did not make me necessarily the most suitable candidate for the role I play on the IRC. It was my role at CIBC World Markets, and I don't think it mattered what my title was when I left there, that made me a suitable candidate for the IRC. So it really does come down to, what is your experience? What are your competencies? And yes, I think the best way to say your best attribute is play well with others is a great way of putting it. So it doesn't require the C-suite tenure on your resume in order to be a suitable candidate. So I'm going to leave that segment there and dive into some of these questions that we've had on the committee. Oh, whoops, I just lost my chat view. 1 second. Okay, so to, just give me 1 second. From one of our audience, I have been appointed to my first IRC and am wondering if you can talk about the complexity of the conflicts you have encountered. Please provide a couple of complex examples. Sorry, I'm just getting my view screen back. So that's a great question. We did not provide, we chose not to provide a detailed list, if you will, of the types of conflicts of interest that each of us in our various IRCs are responsible for overseeing. There are several. Those are also available through the regulated documents, which we've referred to as 81-107. I will start by saying that after the conclusion of this event, we are going to ensure that there is materials sent to Women Get On Board that can be shared with the audience that gives some links, some lists, some helpful information that adds to whatever we're talking about today. Is there I know that the complexity of the COIMS conflicts that are reviewed by the bank are a little different than the ones that are reviewed by Blackrock. So I'm going to ask Marcia, is there one in particular that stands out for you that could answer this question from our audience?
Yeah, we have 13 conflicts that we look at the moment. And I think about 5 or 6 of them, maybe even 5 or 6 of them involve the relationship between the investment manager and CIBC World Markets, the dealer. And Blackrock probably doesn't have that issue. The fact is that we have to trade with CIBC. We buy CIBC stock. CIBC may be an issuer or a part of the issuing group. So there are all sorts of ways that the investment manager needs to, in the interest of their clients, hold CIBC stock, trade with CIBC World Markets if they have the best prices, et cetera, so that those conflicts are very important. And it's not that you can avoid them, but they have to give reports that that they are following the rules and to ensure that the client is being well served.
Can I add a comment? It sounds like it's a very sort of ethereal kind of an activity. It's not so ethereal. Characteristically, you're looking at policies of the manager and you're looking at procedures. And each year, the manager will bring you details on policy and procedures, whether there has been a breach of a policy or a procedure. And you will review all of this information before the IRC meeting. So it's not coming at you out of the blue. You'll have a copious reading to do. But there is a structure in place, and you don't need to invent the wheel here. What you need to do is you need to look carefully at their policies and procedures and how they are showing you that they have in fact adhered to these policies and procedures. That's really how the job gets done.
Thank you. Thank you both. I think that answers that question really well. So the next question from our audience is an interesting one. And I appreciate where it's coming from. I don't know if we'll have enough time to get into the full extent of an answer, but I think it's worth asking Marcia and Merle. here's the question. Is there any sort of coach back to the IRC that occurs if and when the IRC has put forth an opinion that differs from that of the regulator, i.e. to strengthen the IRC's filter? So that, I mean, it's hard to give an example of something where that has happened, at least not in my experience at Blackrock. But I think it's an element that I will just add before I turn it over to Merle and Marcia. The IRCs are allowed to have independent counsel. So in the event that, you know, you don't have a lawyer on your IRC and you want to seek advice from an experienced professional in the legal community that actually have a role to advise and provide support outside of obviously the management, directly to the IRC, that is afforded to each IRC, or at least certainly in Blackrock's case. And there's often times when information will come through and that the IRC is looking for confirmation on questions or clarity. And it is helpful to have what I would call almost like a coach back environment with that outside independent counsel, long before we would be in a conversation with a regulator. And usually conversations with the regulator are very by the book, written documents. This is the opinion. This was the action recommended by management. This was the opinion of the IRC, and this was the action taken. So it's a bit rote, but there, each of you may have had different experiences.
Yes, we actually recently had an issue where there was a breach. It wasn't, you know, it wasn't fraud or anything, but there was a breach, and certain breaches have to be reported to the IRC, and there's a standard letter, and it's signed by the IRC. I signed it. So, and even though management or and actually the legal people within the management company deal with the wording and such, it goes through us. And we've had the IRC come back and say, please clarify this and please clarify that. And we go back and forth a few times. So we get legal counsel in that the inside the manager is a strong legal department that's at every meeting. We haven't needed outside counsel for that. Generally you don't, but you do. There is sometimes exchange with the regulators.
Mm-hmm. Okay. Merle, I don't want to skip over you, but we've got a couple more questions and we only have a few more minutes. So we can, I mean, I can answer this in the question, but I want to give the benefit of the full audience to hear it. Thank you for all your insights from our audience. Are the IRC members included in directors and officers insurance coverage or some other risk protection to give the importance of these roles and decisions they make with the best interest of unit holders in mind? Yes. In fact, the insurance is completely separate. It is independent of any other insurance of the fund, and it is solely for the IRC, and it is reviewed and approved on a yearly basis. That's the experience at Blackrock. I'm imagining it's the same at CIBC and SEI.
We've actually had an insurance consultant come in and review it with us.
So have we. Yeah.
Yeah.
Yeah. Okay. Next question. Is there a list somewhere of all of Canada's IRCs? Would be so helpful in researching them.
One for every fund company.
Yeah, look at the list of funds and you've got the list of IRCs.
You can, exactly. And I think Merle, again, this will be in our post-event write-up. I'm making a few notes as we go through these questions and some of the comments. Yeah, if you can think of a fund company, you can Google IRC fund company and you will get the report to unit holders, which will give, exactly as Merle described, a lot of the information that you'll be seeking.
Some are more detailed than others. Some are more informative than others.
Yes.
Some are more useful than others.
They all have the information about members and when they were engaged, and so you can usually tell. Sometimes you get a sense of when they're going to retire.
Yeah, and I can acknowledge that some will look for ways to post the opportunities. Hint, hint, Blackrock might be posting one in the next couple of months. I am hitting my extended term of 8 years. Sorry for the plug, everybody, but I had to use the opportunity. There are not very many places where we would post historically. As we've alluded to, it's very much through the network. It has been suggested, though, in a couple of circles that, ICD.D and Women Get On Board and Toronto CFA Society, Women in Capital Markets, those are all avenues where public postings are, I think, in a relevant area to the type of applicant that we are looking for. But not every IRC would be looking to do that or take that approach.
We tried with the ICD, and it was an avalanche of irrelevant resumes. So
Yeah.
it's not the most efficient.
No.
But
No, and when
we did get good candidates out of there, but not necessarily any better. And it's a lot of work for us. So
when we tried to engage the ICD in this process, they said no. They were going to focus just on boards.
Yeah.
So that
So
reduces
it is,
the number of competitors for you.
yeah.
Yeah.
Yeah. Well, again, that's why we're grateful for Women Get On Board to have given us some airtime to talk about IRCs and the nuances of these board-like bodies, and obviously the opportunity that it offers so many women who have a background in financial services. So I'm going to turn it off because I don't see any more questions coming in. I want to thank, hold on, please comment on the ability to serve on more than one IRC. That is a good question. Does anybody want to tackle that one?
Yes, I did serve for some years on more than one IRC. That is totally within the realm of the decisions made by your, well, if you're with the CIBC, you ask the CIBC, how do you feel about that? And in my case, they said, fine. SEI has one member who serves on 2 IRCs, but I believe Martha Blackrock does not follow that path.
No.
So
well,
really,
CIBC is most concerned. Obviously, it's on a case-by-case basis. So, and it's a pretty wide playground for CIBC, and Blackrock is, for the really big funds. So it would have to be a pretty small, I actually sit on a closed-end mutual fund board. And technically, it's really an anomaly. So they wouldn't even advertise, but they have to have an IRC. And I by definition sit on that IRC. Again, there wasn't a conflict, so CIBC was okay with it. But they think hard about it, and it's not necessarily. It used to be a lot of people. Some people would sit on a bunch of little IRCs. I think there's less of that now. I don't know. What do you think?
I agree with you. Blackrock does have, does afford us the opportunity to ask, and it is very much in that, as you said, case by case basis. But if there's an ETF somewhere in that other fund's, batch of funds, it's a no-go. And the mutual fund, pooled fund would fall under the same similar camp. So it has been tricky, and up until now, I think there's only been 1 or 2 very small IRC, secondary to someone coming on to our IRC. We have had lots of experienced IRC members join our IRC, and we've had some who have had no prior IRC experience, but came, for example, from a fund management role, fully retired, no conflicts, perfect candidate. So, yeah, that is a really good question. Thank you to our audience for raising it. Thank you for all the questions that were raised today. I really appreciate this opportunity, Deborah, and I'm going to turn it over to you to say our thank yous.
Well, thank you. Delighted. I learned so much about IRCs. So thank you, Martha. Thank you, Marcia. And thank you, Merle. The 3 M's. There was a lot of M's there. We just wanted to say thank you for your time. You were so forthright and shared a lot of insights that I don't think are just in the public domain per se. So lots of food for thought. I know a lot of our members will probably be reaching out to you or watching and observing or doing their research. So thank you all. On behalf of Women Get on Board, we'd like to make a donation to our charity partner, which is Dress for Success Toronto chapter, for your time today. We want to thank Blackrock for sponsorship. And thank you, Eleanor, for making the time today to share and introduce the speakers today. Our next Women Get on Board speaker series will be on February 15th, and the topic is building a strong and diverse board before you go public. Very timely topic. We've got to get them starting earlier, not after they've gone public. It'll be sponsored by IR Labs. So really delighted that you've joined us today. You will receive a follow-up email thanking you all today, thanking our speakers, our sponsors. There will be a survey, so we'd love to hear back from you on the survey, which we will share to the speakers. And then Martha, I know you've mentioned that there'll be some links. So we will also have the recording, and the recording will go out in the next few days. So just want to thank you all today for your time. Be safe and be well.